Welcome to Crypto Pulsar's channel. Let's take a look at Bitcoin's latest market structure. In this episode, we will first focus on the daily chart of Bitcoin. The core point is that price has consistently failed to reclaim the 0.5 level, and each rebound has been weaker than the previous one. The original uptrend has now shifted into a downtrend-dominated structure. Going forward, a retest of the 0.618 level is highly probable, which is a very reasonable path under the current market conditions. Specifically, Bitcoin previously continued to rise from the lows and surged to a high around 126,000. After topping out, the structure clearly weakened and broke down. Price not only fell below the ascending trendline support, but every rebound has also been suppressed below the 0.5 level. This indicates that the 0.5 level has transitioned from support into strong resistance. According to Fibonacci retracement logic, price tends to seek support along key retracement levels, and the nearest structural support is the 0.618 level. As a classic bullish-bearish pivot during trend retracements, the market is very likely to test this area to confirm the strength of buying support below. Now let's look at the volume-price relationship. This decline has been relatively decisive. Drops are smoother and stronger, while rebounds are shorter and weaker. This essentially shows that selling pressure is dominant when price operates below the 0.5 level. Each upward move resembles a slowdown of bearish momentum, rather than the start of a bullish counterattack. Therefore, the most natural market behavior is to continue moving downward to seek a stronger buying zone, which is typically around key retracement levels like 0.618. We examine indicator confluence. MACD has already formed a clear bearish structure below the zero line, with both lines in negative territory, and weakening histogram momentum, indicating midterm bearish momentum and insufficient rebound strength to reverse the trend. RSI is currently hovering near the low level around 30, remaining in a weak zone. This shows the market has indeed dropped significantly, but it is important to note that a weak RSI does not mean an immediate reversal, dotting a downtrend. RSI can remain oversold for an extended period, while price continues to grind lower. Overall, Bitcoin is in a continuation of a downtrend. Failure to reclaim the 0.5 level will likely lead to further downside, with a high probability of testing the 0.618 level. Holding above, it would indicate potential support, while a breakdown would open deeper downside. Now let's look at the 4-hour chart of Bitcoin. The market rhythm is clear. After a brief technical rebound from the 0.786 level yesterday, price encountered resistance at the 0.618 level and pulled back. This is a weak rebound within a bearish trend, and the market is likely to continue declining. Structurally, the previous key support has been broken, and the 0.618 level has flipped from support into resistance. After the failed rebound, price will most likely retest the 0.786 level, and may even revisit the previous low around 59,800. From a volume perspective, volume expands during declines and contracts during rebounds, showing that bears are in control. The rebound is merely a short-term pause, and insufficient volume naturally leads to rejection and pullback. Looking at the 4-hour indicators and price behavior, indicators are overall running below the zero axis. MACD lines remain weak, and the histogram has not effectively turned positive, suggesting bearish trend momentum and that rebounds are corrective rather than impulsive. RSI is around 37, still in a weak zone. In a downtrend, RSI can remain suppressed for a long time, while price continues to move lower in terms of price action. After rebounding from 0.786, price was rejected at 0.618, which confirms a failed rebound and validates bearish resistance. In summary, the rejection at 0.618 confirms weakness, and the market will most likely retest the 0.786 support or even drop toward the previous low near 59,800. Only if price reclaims and stabilizes above 0.618 can it shift into a stage of structural recovery. Otherwise, rebounds are likely to remain opportunities for bearish entries.